Sharp. Okay, let's begin. So, tutorial unit 1 says we need to define cash budget and explain its role in financial planning. So, anyone who wants to try? Anyone? Okay, so cash budget is actually it's a plan, it's a schedule on how we're gonna use our money, and then we need to explain its role in financial planning. Which so we're gonna put it in this way: it's a plan, it's a schedule. So it's gonna determine how much money the business expects to receive, as well as how much money they expect to spend, either based on a particular period or within the particular year. Do you guys understand? Sharp. That is 2 marks. Already I gave you a definition of the cash budget, and then I gave you the role that it has in financial planning. And then we need to discuss 2 reasons why a company might experience a cash shortage despite reporting profits. Anyone? Okay. So one of the reason is, remember, sometimes we might sell our stock to the customers on credit, né? And in our books, we're gonna be like, okay, we made sales, but we have to remember there was credit sales. We didn't receive the money immediately. So it's gonna be like you sold, but in your books you were like, I made a sale, but there was not a cash sale. It was a credit sale. No inflow of money came in. I got, but because you're a business, you need to pay your bills, you need to buy electricity, you need to pay your utilities, you need to pay rent. Money has to go out, despite you. Either you sold on credit or you sold on cash. So if you sold on cash, money will be going in, coming to you. And then if you sold on credit, you're gonna receive it at a later stage. But your rent is due this month. So despite us reporting a profit, we're still making a loss because we're still paying that rent. Even though we made the sale, that is credit sales. The money is still held up. Do you guys understand? Yes, no? Sharp. So that is one of the reason. And then another thing, it can be us buying an equipment whereby cash is going out now. We're buying an equipment, even if profits are going to come later from using that particular equipment. Let's say that we're a company, we need to manufacture tables. So we're doing what? We're taking the money, we'll be like, okay, let's invest in our PPEs. Let's buy this equipment that's going to help us to manufacture, that's going to help us to manufacture and put the parts together for this particular table. But there's no guarantee that we're going to sell that table this year, this month. So it's like us buying a fixed asset and then profits being reported at a later stage. That is the reason why we might be reporting a profit, but we're actually experiencing a cash shortage. Are you guys fine? Sharp. And then we need to differentiate between liquid asset as well as assets that are not liquid, providing one example for each. Okay, anyone who wants to try?
Disbursement.
That can assets that can be quickly converted to cash without losing downstream. Yo, I'm sorry, I didn't hear you. You're saying assets that are doing what? Your background is actually making some noise. Okay, I can hear you now.
Okay. Liquid assets, assets that can be quickly converted to cash without losing much value.
That's correct. And then your illiquid.
Assets that take a long time to convert to cash and may lose value.
Okay, so example of it.
Example, for liquid assets, cash, and then for illiquid assets, it's the buildings or machinery.
Okay, that's correct. All right, and then okay, yeah. Okay, we're number 4 now. So it says that how does improving the debtors collection period enhances a firm's liquidity? So how? If we improve our debtors collection period, so how is it gonna improve our liquidity in the company? Remember, when someone comes to you, buys on credit, okay, you're gonna record it, sell the stock to them. But at your end, you're not receiving anything. And at the end of the day, the business needs money. We need money to pay our expenses in order to continue running. That is our working capital that we need. So if we improve the debtors collection, that means our cash conversion cycle will also reduce. And that means we're going to have enough working capital. We're going to have enough cash on hand in order to pay our expenses as we run the business. Do you guys understand? Okay. And then they say the cash budget preparation. So the finance manager of Siavuma Limited has just resigned, and he was in the middle of preparing a cash budget for the third quarter of 2022. We're required to complete a cash budget below of the third quarter. Okay, let's go through our information. So our information says purchases amount to 70% of the following month's sales. Okay? So that means the next month. Okay, for our current month, we're gonna use the sales of the next month. Sure. And then they say that the expected average accounts payable period for 2022 is 30 days. Okay, that's fine. And then this one says our expected average account receivable for the period it's 15 days for 2022. So let's complete the thing. So just like we said here, we said we're gonna use how much? 70% of the following month's sale. Yeah? So for July, we're gonna be using August and get sale. So can you please calculate it for me? 70% of that. Guys, can you please participate here? So we're gonna take the 800, multiply it by 70%, and then you're gonna get this amount. So for the next month, which is August, they told us 70% of the following month's sale. And get so we're gonna use the sale to account for August purchases. So what is your August one?
630.
630, thank you. And then the September one?
For 9,
490.
190, thank you. Okay, let's move on. So it's 490. Sharp. So then they told us the collection. So when are we gonna collect? The expected average accounts receivable, sorry about that. It's 15 days, and then our payable is 30. So for the collection one will be 15 days. So what are we gonna do here? This is your closing account, second, your collection. So for the credit sales that you made, you're gonna take the 6, multiply it by the 15, divided by the 30. Remember, they told us our collection period is what, half the month, so it's 15 divided by the 30. You guys understand? So that will give you this amount. That means in that current month, we only collected, let me see, it's the collection period or what? Yeah, we only collected half of it.
can you repeat that?
I can't hear you. Okay. And then, so our cash collection will be the opening balance plus the sales that we made, and then what we had at the end of the year. Remember, we said we're only gonna collect in that particular month half of the sales that we made. I mean, sorry, we're gonna collect. We're only gonna collect. Our collection period is 15 days, so it's gonna be the 15 over the 30. You understand? So your balance will be this amount. So it's gonna be your opening balance, which is the opening accounts receivable plus the sale minus the closing accounts receivable. Are you guys fine? Hi, I can hear you. Your background is a bit noisy.
Okay, can you hear me now?
Yes, I can.
I was saying, can you please repeat the party where you say we take sales and minus? I didn't hear that. So.
Okay, so you take your opening, ne, plus your closing. Plus your sales, minus your closing. And then you're gonna get the cash collection. This is how much you collected. So it's like you bought on credit, right? So this was the opening, which let's say you bought from me, and I am the person who accounts for this. So okay, this was last year's amount. Ne? So I brought it forward. So it's my opening receivable. This is the amount that you guys still owe me. And then you guys decided this year that you're gonna buy on credit again. Okay, it increased the amount that you still owe me. And then at the end of the year, I had this particular amount. So I want to know how much I'm left with at the end. No, this was at the end of the year. This is what I was left with. So I want to know how much I was able to collect this year. So this is the amount that I collected this year. Okay, you can talk. You're fine. Okay. Anything else? Should I move on? Okay. All right. So next month. So what is my opening balance for this particular month? What is my opening balance? Remember, my closing balance for previous month will be my opening balance for this month. So my opening balance will be the 300. You guys understand? Yes, no? Okay. So this will be my opening balance. Again, I sold on credit, and then I told you guys, yeah, that the expected average accounts receivable period is 15 days. So I'm gonna take the sales, multiply it by the 15, divided it by the 30. That is the expected average accounts receivable. So I'll be like, okay, the rest of the 15, I'm still gonna receive it the following month. So I'm gonna be like, okay, how much did I receive this month? Provided that the 15%, the 15 over the 30 of the previous month is carried forward. So the closing will be how much? Because remember, I sold you guys and get on credit. And I was like, okay, I'm gonna collect on the 15th. It's 15 day. It's an account receivable collection period. So you're gonna take the 800, multiply it by the 15 divided by the 30, and then the closing will be this amount. And then I wanna check how much did I collect so far. You guys understand? So what's my opening balance for September? I didn't hear you. I don't know if you're using earpods or something, but I can't hear you. I don't know if it's headphones or what. Do you wanna try again? Okay. Our opening balance will be the closing balance of the previous year. So it will be this amount. So what will be our current one? Again, take the sales, multiply it by the 15 over 150, you get this amount. Take your opening plus with your sales minus your closing, you will get how much you collected for this month. And then this is the amount. Do you guys understand? Simple terms, this is the opening balance of the previous month. Decided to buy on credit, you add it and get to the credit to the debt that you had already. And then at the end of the year, you had this amount in your receivables. You can see it decreased. So I want to know how much of it was I able to collect from you? Do you guys understand? Yes, no? Do you guys get it? Okay. Okay. Thank you for those who are answering. Okay, let's continue. This is the one. What am I doing? All right. Okay, let's go to the accounts payable. So the accounts payable, they told us that the period, it's 30 days, né? The expected average accounts payable. So this is your opening balance. And then you're gonna take the purchases that you had here, just fill them down. Okay. And then this one also. Okay. And then what am I gonna do from here? So what is my closing accounts payable? So you're gonna take the purchases that you made this year, multiplied with 30 over 30. Why? Because they told you here, the expected average accounts payable period for 2022, it's 30 days. That means at the end of the year, you're gonna have this, and then how much did you collect so far? This is the amount. Do you guys understand? So your cash disbursements will be 80. Your opening, it's 80. Then this, okay, this is the accounts payable. This is when you buying from your supplier now. Last year you had this debt, and then you made more purchases from the supplier. At the end of the year, you had this. So I want to know, how much did the supplier actually collect so far? And this was the only amount that they collected. That means this amount is still remaining. We still owe the supplier this amount. So next year, this will be our opening balance because we need to bring it forward. Do you guys understand? You do the same. This year we made purchases, and then our cash collection periods told us that it's 30 days. Take this amount, multiply by 30 over 30, you're gonna get the same amount. Just like that until you reach September. Just do the same thing. And then you're gonna get this amount. Just like I told you right now, you're gonna have this amount. Carry it forward, the closing of last year, carry it forward to the opening balance of this year, times the purchases by 30 over 30, and then you're gonna get this amount. Are you guys fine? So for July, our cash disbursements was 80. For August was 560, and for this one was 630. Do you guys understand? No, I don't understand. Okay, where don't you understand? Everything or what? From the start, from the cash budget, like from your sales purchases or from the cash accounts, the accounts payable. Okay, accounts payable. Okay, where particularly? The opening, the purchases, the accounts collection, or what? The opening and the rest. Okay. Okay. Kumalo, you are typing right now. What were you saying? Okay. Okay, let's wait for him. Oh, the same. Okay. Okay, let's go back. So this is our accounts payable, né? Our accounts payable refers to the suppliers that we buy from, né? So at the beginning of the year, we had this balance that we still owe them. This was the closing balance of the previous month, né? So it was the opening balance, it was the closing balance of June. It became the opening balance of July, né? And then during the month of July, we made credit purchases. And then when we make credit purchases, that means that the credit that we still owe them increases, né? So we still owe our suppliers so far. This one plus this one, it's fine. And then they told us that our expected average accounts payable, it's 30 days, né? That means whatever we purchased this year, we're gonna pay it, né? This year, right? This is the closing amounts that we're gonna have. Take these purchases, multiply it with the 30 over 30. And then we're gonna have our cash disbursements, which is gonna be the remaining opening balance. Do you get it? What is that? Guys, are you still lost? Hello? Guys, okay, let me just explain it in simple terms now, so that you guys can understand. They say that the expected average accounts payable for 2022 is 30 days. 30 days. You bought in July. The supplier say, can you please pay me within 30 days? That means you're gonna pay that supplier in August. Do you guys understand though? And then if you bought in August, you have 30 days to pay the supplier. That means you're gonna pay them in September. You guys understand what I mean? So let's say that maybe you bought the thing in 2015, that's July. And then the supplier was like, okay, my accounts payable period is 30 days. So next month, August the 15th, I need my thingy. I need my money that you owe me. So you need to pay the supply. So that's why I'm carrying this amount forward. I'll be like, okay, the whole amount which I purchased this year, I need to pay it within 30 days. I haven't paid anything so far. So far, I only collected what I owed you at the beginning of the year. Do you guys understand? Okay, thank you. Is everybody good? Can I move on?
Yes. Yes.
Okay. Okay, and then we're gonna have our thing. Okay, and then we have our cash budget now. So this were the components that are in your cash budget. We need a cash collection and then we need the cash disbursements. Ne? So let's go to our cash collections. Cash collections, you're gonna give me those balances that you had. Ne? So what was the balance that you guys had? Let's see. Wait, what's on? So it's the 420, the 700, as well as the 8500. So is it the cost production? Eh? So you're gonna give me those balances. And then the same happens here. It's gonna be the 80. It's gonna be the 5. And then it's gonna be okay. And then in closing balance. So what is the closing balance? So what will your closing balance be? Remember, the closing balance will be your opening plus what you collected so far minus this one that you paid so far minus the expenses that you paid so far. So we're going to have this amount. Same applies here. So the closing will be the opening for next year. You do the same. Take this amount plus minus minus. Closing will be the opening for next year. Take this amount plus minus minus. Are you guys fine? Let me start over by explaining the cash budget. So for the sales, this amount for given. Purchases, they told you. Purchases, it's 70, I think 70%, yeah? Yeah, 70% of the following month, I get sales. So we take this one, 70%, then we're good. Do the rest. And then the cash collection one. Cash collection, we had our opening balances, and then we made the credit sales. And then they were like, okay, the expected average accounts receivable, it's 15 days. So within 15 days, I need to receive those amounts. So I received half of this within that 15 days, which I made the sale. And then the half, that means I'm going to carry it forward within that 15 days, which is going to hit maybe on the 1st of August. I need to collect. And then in the month of August, I made credit sales again. The same applies. I'm going to have my closing. I'm going to have what I collected so far. Same applies with this one. You had a cash, you had an accounts payable opening balance. You made purchases from the supplier. And then they told you, okay, the supplier expects the average accounts payable to be paid within 30 days. Okay, what I bought within 30 days, which is going to be the next month, I need to have paid the supplier. So the closing balance will be this amount. And then this will be the cash amounts which I managed to collect so far, which the supplier managed to collect so far, which is the 80. Because they told us that the 30 days after purchasing, you need to pay it next year, next month, sorry. So do you guys understand? Okay. Okay, guys, we have reached the end of our tutorial. Do you guys have any question? This is the memo. Let me just show you the memo.
Is the memo gonna be uploaded?
Yeah, but I can also send you guys the memo latest tomorrow. I'll send it in the group. Okay. We have reached the end of the tutorial. Let me just stop recording and end the. Okay. Do you guys have any questions? Why don't you guys